Yo, what's good, fam? Welcome back to Stack Your Chips. This is where we keep it real about the stock market and make sure you're always ahead of the game. We've got a lot to unpack today, so let's jump right into it with the PPI numbers that dropped this morning. All right, first things first, what's PPI? PPI stands for Producer Price Index. Think of it as the inflation report card for companies. It tracks how much prices are changing for the goods and services that businesses buy and sell. Basically, it's a sneak peek at inflation before it hits your wallet. Here's the deal. Today's PPI numbers show whole prices in December's went up, but not as much as expected. That's some good news because it could mean inflation is cooling down. Year over year, prices rose 3.3%. On a monthly level, prices prices only went up 0.2%. How does this translate? The translation is the pressure on companies and eventually on us might be easing up. Now, after that PPI data that dropped this morning, let's talk about what happened in the markets in today's session. Most sectors were in the green today, as you can see. So there was a lot of positivity out there. But yeah, the tech stocks, Microsoft, Nvidia, Apple, Amazon, Google, they took a hit and ended the day in the red. Maybe folks are getting a little spooked out about their sky high valuations with earnings seasons around the corner, but you never know. It could be something lurking in the market that we don't know about. As for SPY, the ETF that tracks the S&P 500, here's how it played out today. It opened at 584. It hit a high 585. It dropped to a low of 578 and closed at 582. It looked bullish towards the end of the day, but some solid moves. It was real choppy throughout the day as well. So it's kind of sending some mixed signals about what's going to happen with the data tomorrow. Speaking of the data tomorrow, we got the CPI report coming out, which is the Consumer Price Index. If PPI is all about companies, CPI is all about people. It tracks the prices we purchase stuff with every day, gas, rent, groceries, and the expectation is that it'll stay flat, which is pretty good. Why does this even matter? Because this report gives us a clear idea of whether the Fed will need to keep hiking interest rates. If inflation stays stubborn, the Fed might not ease up anytime soon. Right now, the odds of the Feds cutting rates at their January meeting are slim to none. It's like less than 3%. So nobody's watching for that. So for now, we're just watching these inflation numbers, seeing how things trend over time to see if the Fed may cut once this year, may cut twice, or may not cut at all. But based on the CPI, looking at this SPY chart tomorrow, I think we could gap up the 586 and close this gap over here if we have some solid numbers. If not, if the numbers aren't good, I think we trend down. And it turns into a bearish thing. So I don't know how low we go, but hey, I'll wait for the data to drop before I make a move. I feel like you should do the same. So that's the rundown for today on Stack Your Chips. Make sure you like, comment, subscribe, smash that notification bell so you get updated when we drop a new video. So in the end, stay sharp, stack your chips, and I'll catch you on the flip side.